And welcome to another Lumi Financial Corner. With us once again, Michael Zaremsky, head of U.S. Private Banking, Bank Lumi USA, member of the Investment Committee for Lumi Investment Services. Michael, good to have you back.
Great to be back, Zev. Hope all's well.
Thank God. We live in interesting and crazy times, what can I tell you? So, we're only a few days from Election Day. From an investment point of view, should people wait out and not do any investments till let's see how the election turns out?
Zev, that's a great question, and it's a question that many of our clients are asking us right now. As you started by saying, we live in uncertain times, and that's been the case for most of the year. So before I answer the question, let me just state that these are my views and not necessarily the views of the bank or the broker-dealer. And when we do address these questions with clients, I think it's always very important to first understand what is the time and the use of the money that's being considered. There's a lot of volatility in the market, and as we've spoken over the last few weeks, our expectation is volatility would continue to rise as we got closer and closer to the election, just due to a lot of the uncertainty, given the divide of the country and given some of the expectations that it may take a while to know what the results of Election Day are. Probably not election night or the day after, but it may drag on a few days past that. So given that uncertainty, there's no surprise that we're seeing some volatility. But what I do think is important to discern is the difference between we'll call volatility some of the short-term noise that's in the marketplace versus what I would call some of the bigger, longer megatrends that are in the market that really keep us focused on the long term. So for clients that have money that are looking at a long-term result, again, my general view would be, 3 months, 6 months, 9 months from now, markets are likely to be higher, and that's because there's an unbelievable amount of support, which is really driven by stimulus. For a lot of people, they say the key to real estate is location, location, location. And in my view, the key to the markets right now is stimulus, stimulus, stimulus. And that stimulus is taking place both on the monetary side with the central bank accommodation. And as we've discussed, the central bank is basically saying we're going to be in a zero or near zero rate environment for a long period of time. And that's going to be until we hit the inflation target, and they've said we're okay to overshoot that inflation target, and we've not really yet to see meaningful inflation. And then on top of that, in my view, fiscal stimulus is coming. Both sides agree that we need some fiscal stimulus, but again, it's a political football right now, so nothing is likely to happen before the election, but my assumption is something will happen after the election. And just as a reminder for your listeners, when we think about central bank policy, that's macro support for the economy. The macro support is really low rates, which are designed to stimulate investment, and in contrast, they actually punish savers. They're encouraging people to take money from their savings account, from the cash side of the equation, invest it into the market, or for companies to invest it into capital projects because rates are so low. It makes, for funding, cheap funding makes for it to be a lot more attractive to invest in projects, capital investment, etc. On the micro side is really fiscal policy, and fiscal policy provides support from a bottom-up level where they can actually put money in the pockets of people and industry, where they can target airlines, leisure, small business. So again, I think that the question is a simple question, but it's a complex answer based on how you're looking to invest your money, whether it's short-term where you're concerned about volatility or just focused out on the long-term where, again, the mega trend is your friend.
And what you're basically saying, no matter what happens on Election Day, at the end of the day, even though it may be volatile now, but it's going to stabilize because it will be a stimulus, and certainly we're on the right track.
Yeah, and I think also once we get post the election season, we will have some certainty. And people on both sides of the equation can argue about which will be better, but ultimately having some certainty in terms of knowing the direction of the country will be very, very helpful. And we are really starting to see a lot of signs of continued economic recovery. That recovery is broadening out. And I'll just kind of highlight a couple of areas which I think are important. The housing market remains red hot. And housing is one of the highest multiplier effects for the economy. So what I mean by that is a dollar spent in housing gets multiplied very rapidly through the economy because whether you're buying a new house, which is new construction starts, or you're moving into a house, so let's say going from the city to the suburb, you're going to be furnishing, doing a whole lot of stuff, replacing things, and there's a really strong multiplier effect of how that ripples through the economy. One of the other elements that we're seeing and that's tied into that is retail spending is doing very well. And again, we can argue that there's winners and losers. As people are spending more time at home, they're spending more money in different manners, whether it's restaurants, whether it's fixing up their houses, etc., and not vacations. But we're also seeing it in transports. And again, as people buy things, particularly related to that housing element of it, you can see the transport sector and the transport industry doing well as we're seeing more goods being transported around the country. So these things are all really positive. And, again, touching back on always the, both sides of the equation, when we think about some of the near-term volatility and the uncertainty, it also really gets tied into COVID. We're seeing some spikes right now, and then there's a lot of uncertainty of what the government responses will be in terms of, maybe further lockdowns or different places responding in different manners. And then, we get into the debates of whether or not we should really be tracking the cases, the hospitalizations, fatality rates. What are the important metrics of it? So every time the COVID issue kind of re-spikes up nationally or, locally in the different regions or states, you get more uncertainty. And again, I do like the quote from Warren Buffett, which is, be greedy when others are fearful and be fearful when others are greedy. And as we can see volatility spiking up right now and a lot of fear in the market, could be a good time to assess your long-term goals, your long-term time horizons, and make sure that, again, you kind of follow the Warren Buffett adage. So again, I do believe that, again, longer term, there's a lot of megatrends and support for economic growth. We just have to get through the next month or so of what will likely be some significant volatility.
Michael Zaremsky, head of U.S. Private Banking, Bank Lumi USA, member of Investment Committee for Lumi Investment Services. Thank you for being here with us.
Thank you very much, Zev, and look forward to talking to you again post-election.
Look forward to that. And we're going to be right back. Don't go away. Stay tuned.